How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. And let's go ahead and get into Market Mondays for 4/26/2021. And to really reiterate, if this is your first time at the show or this is your first time on the channel, please like, share, subscribe to the content so we can get out to more people. Really would appreciate it if the likes could be equivalent to the views. I would really appreciate it. And one of the reasons why we do Market Mondays is because we want to make sure that we bring a market-based conversation to a group of people that may not have normally been exposed to the market and bring it in a very common tongue. So, we don't want you to think that you got to have a PhD or you got to go to school for 30 years or you got to be one of the people on CNBC with a suit on to really understand how understanding the markets and applying some of this into your daily life can be beneficial to you and can help you get where you want to go. And so what we try to do is bring this to information in a very unpretentious way, in a very common tongue, and to start encouraging you to start having some of these conversations in your day-to-day life because you start to kind of understand how the markets are going to be beneficial to you. So let's go ahead and get into it. So today, the S&P closed up at around 0.18. The Dow closed down at around 0.18 also, and the NASDAQ closed up at around 0.87. So I want to apologize. The S&P 500 closed up at around 0.18. The market really wasn't really strong directionally today. It was kind of somewhat choppy, but not really choppy. And we kind of think one of the reasons is that we had a lot of really massive earnings this week. So we think that the market's really trying to find a direction. And then also Biden's going to be speaking this Wednesday kind of about how he's going to fund some of his infrastructure plans. So what we're looking for is the market going to take the earnings positively that's coming out this week and start really running in a major direction? Or is the market going to remain choppy until Biden comes out with more information about how he's going to fund infrastructure? And then the market's going to kind of respond to that. And we're going to figure out what direction that we're going. What we're kind of looking for is a really strong tech rally this week. So we got Tesla doing earnings, and they just pretty much reported earnings at the time of this broadcast in the after hour. And then we're going to kind of see in the rest of the week how earnings in the tech sector goes, because if tech reports really well and the market responds favorably really well to that, what he can do is push the market in a really positive and bullish direction. So that's kind of what we're looking for. Also, the U.S. Treasury is around 1.58% today. We're going to keep observing that because we're worried about inflation and how that's going to affect the market and how the Federal Reserve may respond to those particular changes in the market with monetary policy. Now, let's go into the jump outs. So what we're going to do in the jump outs is we're going to kind of discuss companies that may have done really well today, not have done that well, and kind of give you some context. So we saw Coinbase. They came out today. They gapped up at the open, right? Sold off a little bit, but pretty much recovered almost by the close of where they gapped up off. So they was up around 4.44% today, around $12. This has been a very volatile stock. It's sold off pretty much a little bit after its IPO, but it lucky it may be starting to recover. I'm really going to observe this stock because I really believe that this is going to be a big bait and switch over time. I think this will be a major player in the crypto space over time. But I think initially these first 6 months to maybe a year, this is going to be a big bait and switch play for a lot of people because a lot of people are looking to trade places with this stock. And so until they finish trading places, you're going to see a lot of volatility in this. So this is not investment advice. I'm not here to tell you how to invest. I would be hesitant at trying to be early on this. If this is a valuable company, right, you're going to be able to get in it to me at a decent price long term. So if this is going to be a viable company long term, you should be able to get in at a decent price. But like I said before, there's a lot of people that are in this deal that got to get out. And they need you to help them get out. And most people are going to help them get out by letting them get out at a really good price. And that's all they're waiting for. OK, now we got Amazon. Amazon came out today really strong. Right. If you talk about Amazon, that's such a massive ticker. They can go up $68 and then it'll be a 2% move. But this is a really strong move. If you look at Amazon over the yearly chart, every time they get around 3,500, they reject it. Right. So we want to look and see, is that Amazon going to push towards 3,500, push into the 4K mark? I personally thought Amazon would already be at 4K by now, but I think if Amazon starts trading around that 4K mark, I think there's going to be a big push for them to have to split, right? So that's something that I'm looking for. I'm looking for to see, can they get past over 3,500, start trading at over 3,500 for an extended period of time. And then if they start trading over 3,500, start getting towards that 4K and that becoming a lot of their normal trading activity, will there be a lot of talk of them splitting? Because what you're going to have with Amazon is that they're such a massive company, and I may do this one day in the stock breakdown. They're such a massive company. They have such a massive footprint in the market. They're really, I wouldn't call them predatory, but they're very aggressive about the way they do business. And their stock price is going to be around 4K. I don't think that looks good. I don't think comprehensively that looks good. And I think there's going to be a lot of talk for them to split to make their stock more accessible to the average American person. Now we're looking at GameStop. Really interesting. GameStop came out today. Really strong move, up at around 11%. This to me is going to be another bait and switch. And we've already seen it somewhat. But what we're seeing with GameStop is a little bit of a consolidation based on news. So it's not selling off on news, but it's somewhat consolidating on news in a really a nice little trading range. However, and I think I did talk about this also before, it's trading at numbers that it's never traded at in the history of the company. And what has fundamentally changed in the way that this particular company does business? What new partnerships do they have? What new products are they bringing to the market? What has changed? So the question is, how long will they trade at these new numbers? Will they come down from there? Or is this just going to be their new norm where GameStop is going to be a $170, $160, $180 stock, even though nothing has really changed about their particular way in which they do business, and their market that they actually operate in is contracting? So I think this is also going to be a bait and switch for a lot of people. But like I said before, is the people in this deal, they need you to help them get out of this deal. If you help them, then you're going to be a real big benefit to them. You're going to be a blessing to their campaign. So now let's talk about why you should be on earnings calls. And this is something that I rarely see any of the other quote unquote stock experts, even the people that have formalized education in the stock market, talk about. And this is something that I very specifically teach the students in my options training course, right? Because I understand what this actually does for people. One thing we got to understand, and what's interesting is I think a lot of people miss this because one, they don't watch the show, and two, they don't watch it to the end, is the average person may work for a publicly owned company and they never talk to or hear from the actual CEO of the company. They never hear from the CFO. They never hear from the COO. They never hear from like the marketing director. They never hear from what we call the C-suite people. And that's a downfall because you don't really understand the direction of the company, because you've been indoctrinated as the American worker is that you're supposed to work for focus on a lot of other stuff like the football game, this person getting shot, what this politician said, what that politician said, China, yada, yada, yada. That's supposed to be your focus. However, you work in a company that's publicly owned, and every 90 days, the leadership of the company has to justify to ownership why they should remain in that company. Now, I want you to understand what I just said. The leadership of the company, right? CEO, the top brass of the company, have to justify the ownership why they should remain owners of the company. Well, who are ownership? Well, part of the ownership is stockholders. There's other people that have ownership in the company, or the company may owe them some level of debt. But really what they have to do on earnings is justify the shareholders why they should remain shareholders of that company. And shareholders do have a level of ownership in the company, right? If you start to understand how it's scaled out. Therefore, it's their job to get on these calls and one, get you to believe that you should remain ownership. And they're not just talking to individual shareholders. They're really talking about to the big funds that hold their stocks. Now, some of these funds really are going to be long-term holders because they have so much faith in the company. But as a publicly owned company, they have to do this. This is part of what they have to do and how they have to operate. And if they don't do it really well, and there's a lot of other things going on in the market, it can cause a sell-off in their stock. And especially if you're a young up-and-coming company or you're an older, more established company, earnings calls can be very, very important, right? Because you're vulnerable if you're young, and you're also vulnerable if you're older company that you don't get a lot of growth in your stock anymore. So a lot of people can figure, well, it's a good time for me to get out because I can put my money in other places where my money can grow at a lot faster rate than what it's currently growing at. So one of the reasons why I encourage people to get on earnings calls is because the average American person has never heard the CEO of a company even speak outside of like a PR situation. So what I mean is that let's get Zuckerberg to get on this TV show, and since he's essentially been told what the questions are going to be before he gets on, and everything's been very, very regulated, right? As opposed to them having to substantiate and justify what did we do last quarter and what are we going to do the next quarter, right? In regards to the performance and the desires of this company. Another thing that's very, very valuable, right? Even though I don't necessarily agree with how it's constructed, is that analysts are allowed to get on the phone and ask these people about what's going on in the company. And what you're supposed to do is look for inconsistencies, right? In what they're saying is going on and their behavior on the earnings call. So if I see that a CEO is avoiding certain questions, I know there's something there. So if analysts are getting on and asking certain questions, there's something going on why they're trying to avoid a question. So let me give you an example. Around about this time last year, before COVID really hit, so a little bit earlier than this time last year, FedEx did an earnings. It was terrible. They were getting killed by Amazon. They got on the earnings call. I listened to the earnings call. The people that got on that earnings call, you would think they just started working for FedEx the day before yesterday. They really had no answers to anything because they couldn't really come up. They did not have a plan as how we're going to deal with the fact that Amazon is just taking all of our market share. Right now, what they could have done was just given what we call give no guidance, which means that we pretty much going to just release our earnings and the documentation, maybe speak about our earnings and get off the call. And they can do that. But a lot of times that makes your stock sell off because you're not telling us where we taking this company in the future. Right. So one of the things that I teach people is that when you're focused on the market, I'm not going to give you like all the special sauce in my particular course because you need to buy it before you get in. But when you're really focused on the market, listening to an earnings call is very, very important. Right. And I don't care if people steal this and implement and put this into their course, because we would all benefit from listening to more earnings calls. Many of you are taking your capital that you're creating with your labor and you're putting it in the companies and you never listen to an earnings call. You're just going off what an analyst is saying. Question I'm going to ask you again. Why do you think that analyst has a better understanding of what you're putting your money in than you do? And if they do, why do they? Because it's your money, not their money. So how can you get the best understanding of where you're putting your money? One of the ways is to listen to earnings calls, because once you become an owner of that company, that CEO, the whole top brass of the C-suite of that company, they're accountable to you as an owner. You're a shareholder. You have ownership in this particular company. You're an equity owner. So they're accountable to you. So then therefore, they have to answer certain questions. Another thing, when you listen to the earnings call, and this is why I try to help people get a better understanding of the broader market and how the world really works. Pretty much all of the top firms or the top companies in the market, if you get on the earnings calls, Goldman is on every call. I'm gonna repeat that. If you take a lot of the top companies in this the New York Stock Exchange and NASDAQ, if you take the top companies, right, and you listen to their earnings call, Amazon, Tesla, Apple, Ford, whatever some of the top best performing companies, some of the biggest companies, some of the most robust companies, some of the companies that do the best business, have the most market share. You will be surprised that a Goldman analyst is almost on every call, and almost on every call, if they want to get on the call and ask a question, there is no problem. There's certain people that can ask to actually get on the call live and ask questions, and they're not allowed to. But what you'll find is that if Goldman wants to ask a question on a call, nobody objects to it. And they're on almost every call. And if you listen to enough calls, that'll start to stand out to you, that their footprint is that big that one, they have enough analysts to be on all these calls, but they're on every call. So the question is this: if Goldman is on every call and they're way more capitalized than you, they got way more access to information than you, they have people on the ground in different parts of the world that can give them up-to-date information, and they make sure they have people on these calls. You don't have the structural support, the capitalization, anything that Goldman has. How come you're not on the call? And you'll see why they're who they are, because they make sure that they do that type of due diligence. So that's what you want to understand. Now, people may say, well, I got to work, I got to do this, I can't get on the call. All these calls are recorded. They're all archived. So if you're in a company right now that you're putting your money into, how come you haven't listened to their archived calls? Right? So you don't have to, I might not catch Tesla's call because I think it's going on currently right now while I'm making this video, but I can catch it later on tonight. It's going to be archived. You understand what I'm trying to tell you? And I was on a Tesla call and I found out, listened to it one time. I was doing something. I had to listen to it on my phone. I found out that you can buy a Tesla through your mobile device. I didn't even know that. Elon talked about it. And there were a few car companies in which you can do that. Now, I'm not a Tesla fan, but I thought that was cool, to where you can literally buy a Tesla on your phone. You don't have to buy it physically anywhere. You can just go on your phone and buy the Tesla and they have it shipped out to you. Okay, so I thought that was real dope. So listening to these calls is where you can learn a lot of stuff. And like I said, if the heavy hitters are on the call and they understand at the level of due diligence that they need to have to be in these particular companies and understand what's going on, and you're not a heavy hitter, why do you think you can cut corners? And at the same time, just because they're in a deal doesn't mean you should be in the deal, because they may feel like they're on the deal because they actually listen to the call and understand what's going on with the company, as opposed to watching CNBC or watching one of these YouTube people who just hype up a situation without really giving you a pragmatic, comprehensive understanding of what may be going on in that company and what's going to be some of their strength, weakness, and opportunities and threats that could be affecting that company in the near future. So I really, really encourage you to get on earnings calls, right? And that's something that I teach my options traders. I don't teach a long-term investing course. I teach traders to be on calls. Why? Because other firms that have trading desks, they're on those calls also, right? And traders need to understand how to congregate and be around where other traders are at, because that's how you're going to get better at trading. So this is going to be Market Mondays for 4/26, 2021. Like I said before, do me a big favor, like, share, subscribe. Try to make sure I'm trying to go on I'm trying to make sure that the likes are equivalent to the views. If you have any questions, reach out to me. If you want to know more about the highest paid part-time job in the world options training course, reach out to me. Heads up, we just raised the price on the IPO course. So everybody that didn't get in at that really, really cut rate price, you missed out on the opportunity. The prices will continue to go up. The value that we're bringing, the transformations that we're bringing in people, the value of the course is still underneath what it should be from a market-based standpoint, but we're currently building up credibility in the market. We wanted to come out and make sure that it was a price that was going to be accessible to a lot of people, and then we're going to continue to move up. So if you want to get in on that, I would really make an effort to get in as opposed to standing on my feet. However, the choice is yours. Do what you got to do at the end of the day. This is David W. Williams, also known as Diamond Dave. I'll talk to you later.